Today, my guest is Dovid Preil. Dovid is a real estate syndicator and also deals with people about changing their mindset on how to get a wealth creation mindset. And in just a minute, we're going to speak with him about how to go about changing your mindset to get on the path of wealth creation. But first, I want to remind you, if you like the show, CREPN Radio, you can like, you can share, and you can subscribe. And as always, we'd love to hear from you. We invite you to comment and let us know what you're thinking. Also, want to remind you, if you want to see how handsome our guests are, you can check out our YouTube channel, and that's Commercial Real Estate Pro Network. With that, I want to welcome my guest, Dovid. Welcome to CREPN Radio.
All right. Thanks for having me.
Well, I'm looking forward to our conversation today. And before we get started, if you could take a minute and just share with the listeners a little bit about your background.
Yeah. So I took, I guess you could call a bit of an unconventional route to get to where I got to. My training, goes back. I was a rabbinic student and actually rabbinically ordained. And then moved to Israel, where I engaged in advanced Talmudic studies for a number of years. And then I entered the financial sector, where I worked as a mortgage broker in Israel, which is actually quite different than the role in the U.S., but that could be a completely separate podcast conversation. From there, I came across a lot of people who had access to money, who were looking to buy an apartment in Israel per se, but they couldn't qualify for a mortgage. Their limitations here are quite severe. And so I set about to start organizing those funds into some high quality commercial real estate deals. And that's kind of how I came into syndication. Now, in the course of doing this, I personally was studying the art of wealth creation, reading and listening and learning about it. And what I saw from a lot of people, even people who were sitting on some money or even a lot of money, is they just didn't have the right mentality. There's a fear and there's a lack of understanding, especially around topics like savings and risk. And I saw from there that there's this very strong need for people to understand a little bit more what it means to have money, what it means to assess risk, and how to approach it in a way that actually is productive and will help you reach your goals, as opposed to being something which is a much more reactionary approach to their finances.
No, that's interesting, and just your cross-cultural experience there, I think would be eye-opening just by itself. Just recognizing how different countries and cultures are able to work or do work with respects to banking and financing and all that.
Oh yeah.
So, I'm kind of curious because where was it you were before you went to work in Israel?
So I was in a rabbinic program in Yeshiva University.
Okay. All right.
I studied there, and there I was ordained.
Okay. Okay. And then how long were you a mortgage broker?
3-4 years.
Okay. And were you primarily working with, you mentioned people trying to buy apartment buildings. Was it commercial mortgages or was it residential or both?
No, apartments. Apartments. People trying to buy apartments.
Okay. Like the individual unit or an actual building?
The individual unit. People just trying to buy a home.
I gotcha.
In Israel's apartment buildings are much more prevalent. What we would call condos in America,
right,
is the equivalent to how most people operate here and buy here.
No, got it. I just want to make sure we're clear on that because when I heard apartments, again, the
right.
first thought was a building, and then I was going, okay, maybe he's talking about a unit there. So, okay, gotcha.
Yeah.
Gotcha. All right, so your experience kind of took you through the recognition of just the mindset kind of thing, and what did you find? I mean, when you were digging into that, as far as where people were and what was holding them back?
Well, that's a great question. The first thing I saw was when you bring up something which is outside of someone's box, is the first reaction you're going to get is, oh, that's risky. I don't want to do that. That's risky. And I said, well, why is that risky? And like, it's just risky. Like, you can lose money. When you invest, you can lose money. So investing is risky, or investing money in real estate is risky. A lot of people, especially here, um, even in the U.S., and real estate investing is something which only recently has become something which a lot more people do. It's typically been relegated to people with a large excess of money. Because investing in real estate in smaller sums is something which is still very new, and a lot more people are comfortable with things like the stock market and their retirement plans than they are with real estate. So without actually assessing the actual risk value or understanding or quantifying the risk, the first reaction, just because of the lack of familiarity, is it's risky. And there's a part of it that's true. Whenever you invest in something, you don't understand it, that's incredibly risky. You need to understand what you're doing. But the answer is not, I'm not going to do it. The answer is, let's take the time to learn about it. Real estate is not rocket science. The average person can get a sufficient understanding of what they're doing to mitigate that risk.
Yeah, yeah. No, that's true. I mean, I like what you say there. If you don't know what you're doing, it's risky. And that should be kind of a motto for anybody. I mean, it doesn't matter even if you're, trading stocks or whatever, or buying mutual funds. If you're not paying attention or talking to somebody that knows what they're doing,
Or derivatives.
yeah, exactly. I mean,
mortgage-backed derivatives.
yeah. I haven't heard that. Huh? What could go wrong with that?
Yeah, I don't know.
Yeah. Well, I know back even pre real estate crash, the whole day trading thing was a big popular thing back before the .com, bubble. I remember, people were the day traders were big, where they would try and get in and out, and you could see something go up, and I think one of the curses of a rising market is that everybody all of a sudden pays attention, and everybody gets in, but not everybody knows what they're doing. And and then I think the other thing, the flip side to that is, that fear that you speak of is that you don't have to look too far back in recent history to point to disaster. But I think that one of the things that I'm kind of curious about is, how do you see people as they work to understand something, bridge that, the past with, the past disaster with what's going to happen in the future, or preparing so that it doesn't affect them as negatively as, maybe it did before?
That's a great question. And for starters, I syndicate. I don't run my own deals. I syndicate for others. So as a rule of thumb, I only work with people who have actually been through at least one crash. So, I mean, if you just talk to people who are out there today, anyone who's just getting started or has been doing this for 5-6 years, the attitude is not the same as people who actually had to find a way to pay their bills in 2008 and 2009. So that's one thing that I do. And in terms of actually mitigate, and then within the deals themselves, we focus on properties we're willing to forego upside if we can get good risk mitigation out of it. So we're looking at properties that have a certain, I don't like the word risk proof or recession proof, because nothing is recession proof, but they're properties that are traditionally more resistant to it. You have, we have a shopping center with a Dollar Tree, which is performing incredibly well. And Dollar Tree is a kind of store where when the market tanks and people are tight on cash, that's where they're going to shop more. So those kind of stores tend to stay open. You look for good corporate leases. You can look for good strong areas that can ride out recessions. Multifamily is a very interesting sector to me right now, because I know it's traditionally viewed as being recession proof, and I understand the logic behind it. What interests me is that it's come up so far and fast since the last crash, way more than in previous times. I'm curious to see how how it handles the next recession. I'm not saying I'm not doing multifamily deals, but I would certainly favor a B or C market over an A market in today's market, because, I mean, it happens to be it's a double win, because the returns there are better, but also it has less room to fall. You approach every deal. My initial underwriting, every deal starts with, what's the protection on this deal? How safe is this deal? Only after I establish that do we start really analyzing the numbers and understanding the cash flow. Beyond that, you diversify. I have to point that out with one of our major plays here. The value that I add to a lot of my clients is I take smaller sums to allow them to diversify into a range of deals over a range of locations. We're in the middle of raising now for a deal will be in our fifth state. We're a small operation, but beyond that, you prepare people. You let people know, this is what we're doing, and don't rely on this for income primarily. It will come, but there can be things that happen, and markets can crash, and you can lose money, but if you're earning 10, 11% a year and you take a hit, chances are you go down to 4, 5, 6% a year, and you got to be able to absorb that and understand it's going to happen and be prepared emotionally for it. But the nice thing about real estate is that it typically comes back.
Yeah, no, and I think if you're one of the nice things, I guess one of the features of real estate, I'll say, is that it's not always easy to get in or out of a property, unlike a stock where you can call your broker and sell, and maybe you miss the up, or you buy at the high and in a panic, you sell before it goes back up or something like that. Whereas real estate, it's a little bit more of a thought out transaction. Kind of has that kind of knee-jerk reaction proof to it. I think is one of the things, at least I've witnessed in my own experience, just over time, is it's you're not as prone to get in and out. If your view is more for the long tail, I think you've got more of an opportunity, just kind of like set it, forget it, kind of thing.
Yeah, no, that's something I tell my investors all the time. Is that one thing I like about real estate, especially for people who aren't in investing and they're not sophisticated about investing, is exactly that. You're not going to be able to make a bad decision on your own. You can't panic sell.
Right.
I think that's one of the it is a nice feature of real estate investing. Yeah.
Well, and it also prevents you from just staring at the screen or looking at the paper or whatever and seeing how the price is going down, and you're just I've got friends that are in that, and they're their emotions are pretty close to whatever the stock's doing, kind of thing. Right. They're attuned to that. So it sounds like starting with knowledge. When you're educating people that are looking to get in real estate, do you start from a global mindset, or is it even more about the the goal of creating wealth, or where do you start in changing one's mindset?
Right. So it really depends on where we're at the conversation, how they came to me. So, I have, if someone comes to me, I'm promoting a deal and they want to know about the deal. So then we just sit down, we go through the deal, and I give them whatever information they need about the deal. And I have a rule of thumb when I talk to people. I tell them from the beginning, if there's any phrase that I use or any concept that I say or explain that you don't understand, you got to interrupt me and cut me off and make me explain it to you. Because a lot of times people will just sit there, don't want to feel like they're stupid, but okay, so you don't know what an IRR is, or you don't know what even an ROI is, but you're not supposed to. Cut me off, let me explain it to you so that you know what you're doing and you're comfortable with this. In a lot of my more, I guess you call it the content marketing side of my business, the stuff that I put out there, when I talk about there, I talk a lot more about general, what I call wealth mindset. It's a much broader picture because there really is a lot of pieces, but I really believe that most people, and a lot more people than actually do, can understand it. They can engage with their finances. They can, start off by building a budget and living their life in a certain way, which is geared towards growing their cash flow and growing their passive income and building a resiliency in their income that can serve them very well. And I think it's something which is in the reach of most people. But it is a bit complex, and there are a lot of pieces to it. But if you take it one piece at a time, I think a lot more people then could do it than are actually doing it, and that I think is very unfortunate.
No, I'm always kind of surprised and saddened, when I talk with people that I would think would be more attuned to it, but I don't know if it's basically they look at how much income they can make so they have more money to spend.
Yes, exactly.
As opposed to some sort of a save or grow or create wealth. And I think that it's kind of one of those things. I tend to talk with people that are investment oriented and understand that, that income has to exceed expenses in order for the thing to work. And then you take that excess, not go out and blow it, but you invest in, cash flow producing assets. And you then take that cash flow and invest in additional assets. And that's that snowball effect that you get. I think what's the guy, the Rich Dad, Poor Dad, can't believe him.
Kiyosaki.
Kiyosaki, yeah. I mean, he's done a good job of basically, he's kind of the go-to reference as far as I think a lot of people. That's kind of one of their first, chances to read and understand that concept. But beyond that, though, I mean, most people, if they look at they're going to get a raise, they're looking at how they can get a new car or a bigger house, or take on more debt service. And you mentioned, is that essentially the first step you see that people have to have in order to
I mean, practically speaking, yes. I think there's some I think budget, yeah, practically speaking, the first step obviously is going to be budget, because most people aren't starting out with $500,000 in the bank. It's nice when it happens, but most people aren't there. So yeah, the first step is you just got to create that money. And the way you create that money is by not spending it and wasting it or using it before you actually put it to work. I think that what happens is a lot of people, until you begin to appreciate the power that money has to create more money and that wealth has to create more wealth. So you have an extra, whatever, $100, $200, $1,000. You're not thinking of that as, oh, $1,000 is another $80 a year of passive income. $10,000 is another 800 years of passive income. You're not thinking like that. You're thinking of $1,000. What can I do with it? Oh, so I'll go buy myself, I don't know, whatever people buy with $1,000 these days, a new iPhone. But once you change your mentality and you realize that wealth begets wealth, and you can use that, so then you're going to start. It's going to change your approach to. You're not just holding yourself back. You're not just limiting yourself for the sake of limiting yourself and saving up. It's very hard to think very long term. And if one's approach is, I'm saving up for my kid's college or retirement, so there's plenty of time for that. I don't need to think that far in advance. That's hard to do. I'm not saying it's wrong. I happen to think it is a little bit wrong, but that's another conversation. But that per se is not the problem here. The problem is it so far out, it's hard to think in those terms, and you really feel like you're limiting yourself. But if you look at every extra dollar you make as something that can then become a worker for you, that can go and generate money for you, you're going to be it's going to be a lot easier to stop spending that money and putting it aside, because you hit like $10,000, $20,000, you can start investing that thing. And that starts making passive income, starts working for you. So that's the question, how you view it.
Yeah, no, I think that's key. Is it's and I think a lot of times too, when you basically are living hand to mouth, it's hard to see yourself having an abundance kind of thing. But it really does. I think the budget and the discipline, and then just having some sort of mindset of creating these additional streams of income is key to it all. For those that have created a nest egg or something that they can invest, where do you see the conversation going as far as at what point are they open to or look to real estate? Is there is it stocks and bonds, or do people are more and more people, we talked originally about how kind of the rage of real estate has been recent. What do you, when you have a conversation or you're working with somebody on their mindset, how do you frame that for the benefits of real estate?
So it's not that I don't push real estate per se. I think there's a lot of benefits to other investment vehicles. I do trade the stock market. I'm very partial to options, just because there's a lot of power to them, and they're just a lot of fun if you really get into them. I have a lot of fun with options. But again, that's not for. I have about 11 years experience with that. I'm not promoting options for every Tom, Dick, and Harry. You have to know what you're doing, and if you want to do it, there's what to learn and there's ways to do it. And I'm happy to sit down with anybody and tell them all the mistakes I made till I got to where I got to. And how much money I lost doing that. And how to not lose that money. When it comes to talk, it depends who you're talking to. You have people who, what I try to, one thing which is important is to look at things very holistically. People, let's say you have a 401k and you're not doing self-directed. So your 401k is in the market and you have a couple $100,000 there. So then to start talking about the $100,000 you have in the bank and dividing it up between real estate and stocks is kind of silly because you have $400,000 in the market already. So for you to diversify yourself more carefully, you'd want to stay away from the stock market at that point. You have to take everything into account. The other factor with the stock market, as you mentioned before, is I'm much more inclined to tell people to go into the market if they have some sort of financial advisor who's going to be helping them maintain a sense of balance. Or if the person is just a calm personality. If someone is a little bit skittish and they're going to be managing it on their own, the last thing I'll tell them to do is to go buy, the S&P ETF because they're the kind of guys who will lose a lot of money. So for that person, real estate has that added value of not being something you can just waste easily. I think in today's day and age, I've started personally looking, I don't know everything. I've started looking much more seriously into precious metals because I think that's an interesting play. Not that I would tell anyone to put a lot of money into it, but I think as a small piece of a retirement plan, I think it's a very strong hedge against currency risk, which I think it's a very real thing and it has potential. I'm not saying it's going to happen, but I think there's a lot of interesting things happening in that market as well. So, it's really just about, there's no one size fits all and there's no one right answer. It's really, all the above. Different things are right for different people. And you got to just learn one at a time and see what it's about and how to do it right. And then you roll into it.
Yeah, no, I like the concept of learn one at a time. I think, a lot of times it's overwhelming when you consider all the options and stuff, but really, whether it be real estate or what have you, but just try and really, get a strong hold on the concepts and the numbers and how the numbers work. It sounds like you've spent a little bit of time learning options and stuff, which I'm sure you've got some stories you could share of how things didn't go well with options. But it's that school of not only just learning, but then don't be afraid, to get in and do some of it, so that you can, have some experience and maybe kind of dip your toe in. Is there once somebody has a mindset and they're committed to it, is there do you find that people, they need a nudge to get in, or is it, you find people?
Everyone's different.
No?
Everyone's different. Depends where you're at. Depends your personality. Depends who you are in life. If you're a doctor and you're working crazy shifts and you want to start getting into investing, you're not going to have that much time to put into it. So you need to figure out. And this is an important point. You have to figure. There's a lot of options out there, and you have to figure out what makes sense for you, given how much time you want to and can give to it. So if you're very busy, learning how to trade crypto may not be the best way to start investing. You should take something which is a little bit easier to learn, a little bit more conservative, and a little bit safer, and start with that. And then, if you have a break or you want to do something else, you set aside enough time to do it, and then you can build your investing plan. It's a question of how much you want to do actively, how much you want to do passively, and build a plan around that. You're not trading options. There are strategies that require you to sit there watching the screen every second and trade little micro movements. And I hated that. But I learned a lot about them. I learned a lot about different strategies and different ways to play it and different types of combinations. And I came across, and in the course of doing that, I found I don't want to spend a lot of time on this. So I found a strategy that allows you to make very nice returns with relatively low risk, requires minimal monitoring, it requires daily check-in. My actual activity in the account is not very much, so I don't spend a lot of time on it. Now, would I make a lot more money if I was good at watching the ticks? Yeah, but I don't want to do that. So, you can build, that's just an example. The point is you can build an investment plan, and you don't have to do it all at once, and you build it over time, but you do it in a way that works with your life. So that way you can do it successfully and calmly, as opposed to feeling rushed and opposed to just rushing into something.
Yeah, no, you brought up another thing that kind of makes me chuckle in a way that I've got a friend I know, and he talks about this one concept that he's been trying to, when he uses it, it works great, but it's the challenge of being disciplined and staying with it, because occasionally he'll catch himself and he'll react, just to the market kind of thing. And again, he'll basically undo the gain because he was following the his plan or whatever for this concept
Mm-hmm.
thing. And so I think that discipline thing is really key there.
Yeah.
But David, I want to shift gears if we can just a second. By day, I'm an insurance broker, and one of the things we do with our clients is risk management, where we constantly are assessing risk and trying to determine what the risk is and what the best strategy is. And there's three strategies that we typically look at. One is avoid the risk, two is minimize the risk, and the third is transfer the risk, which is what an insurance policy basically is. And as of late, I've been asking my guests if they could identify what they consider to be the biggest risk. And just to be clear, I'm not looking necessarily for an insurance-related risk answer, but if you're willing, I'd like to ask you, Dovid Preil, what is the biggest risk?
In what? Real estate?
Well, real estate, yeah, or real estate investing.
Real estate. Well, again, there's real estate investing and in real estate itself. I think the more interesting answer, the more practical answer is investing, and that's, to me, the biggest risk is going in with the wrong people. Because anything can happen, and if you're working with good, honest people, you have the best chance of coming out ahead. I think the more interesting answer, though, is what the biggest risk to real estate is, and that's a topic which I find to be fascinating, because I think the answer is technology and all the advances we've had in technology and we're having. I think that poses a very, very interesting longer-term thesis, and to see how it plays out with real estate is fascinating to me. Just for example, you don't have to look very far. The fact that everyone thought as of a couple of years ago, or even there are people today I speak to today that think that retail is going to die because of Amazon. I mean, that's just an example where technology completely upended an entire major sector and it's transformed it. And I think I have a lot of faith in retail, and I think the numbers speak to that faith and they back it up. But it changed. Retail had to really adjust and change how it operates because of that. And I'm seeing stuff coming down the pipeline in technology, and I'm very into technology. By day, I work for a very advanced fintech company. It's doing some pretty groundbreaking stuff. And I think that I'm by training, I'm a programmer actually, and I think technology is incredible what it's doing, and the advances that are being made in things like autonomous vehicles and 3D printing, both in terms of 3D printing housing and 3D printing goods. I'm going to go out, I'm going to be a little bit futuristic here, but if you can 3D print a house next to a town that you want to live in for with the land and everything, for 2/3 the cost of an existing unit, what's that going to do to the value of real estate? And you can do it that's not happening tomorrow. But those are the kind of questions that I ask myself, or what happens to warehousing when I can just buy a 3D printer and just print a product? I'll just go instead. It's kind of like, this is super futuristic, but I just go to a company, I press a button, and their specs go to my printer and just prints out the device for me that I want to buy. There's a lot of interesting things happening here, and there are things that are going to be talking about in 10 years that don't even exist today. It's changing the market. It's so interesting.
Yeah, no, I think the 3D printing thing is absolutely just almost mind blowing. I think, I'm trying to think where it was. Was it something I heard or read recently about even the space, maybe not the space shuttle, but just different applications where they're actually able to, in industries where it used to take weeks or months to get the particular part, now it's a matter of an hour or whatever just to print out the new part, and just even the time lost, and all of the different materials that they're able to use. I mean, it's not just a matter of ink to paper anymore. It's, whether it be metal or I saw you mentioned the building structures, kind of a crane set up in the middle and pouring a concrete building, based on just That was like basically that printer just kind of
The
going
program.
around and around and around and around.
Look, they
And
built a 3D printed office building. I think it was in Abu Dhabi. I saw. It took them about, was it 2 weeks and 7 workers to build the entire like building.
wow.
I mean, I don't think this stuff is happening. It's not happening tomorrow, but it's happening. So, I mean, where's it going? I think where all the chips going to fall, I have no idea. But it's fascinating to watch, be a part of it, and find a way to profit on it.
No, exactly. Dovid, where can the listeners go if they would like to connect or learn more?
Right, so I'm very active on LinkedIn. That's how we met. It's Dovid Preil, Dovidpreil. And so you can check out my website. It's ydlpinvestments.com. I have a newsletter there. I send out deals if you want to sign up for that. And you can just reach out by email. It's Dovid, D-O-V-I-D, at ydlpinvestments.com.
Got it. Well, Dovid, I appreciate you taking the time. I've enjoyed our talk, learned a lot, and hope we can do it again soon.
Absolutely.
Absolutely. All right, and for our listeners, if you like this episode, don't forget to like, share, and subscribe. Remember, the more you know, the more you grow. That's all we've got this week. Until next time, thanks for listening to Commercial Real Estate Pro Network's CREPN Radio.